So let's talk about, as you start a new business. Some of you, if you're forming an LLC or corporation, it might be for a brand new business from the start. Some of you may be transitioning from a sole proprietorship. But the key is, of course, is to launch with confidence. In order to do that, you have to have what's called a complete foundation. And that's what we like to help you with, is not only understand which entity is best in which state is best for you, but to make sure you have a complete foundation. And that means the correct record book, operating agreement, bylaws, minutes of meetings, and some training, which will come after we get the entity formed, to help you implement those things, referrals when it comes to the bookkeeping and accounting, so you run your business as a business, not a hobby. So these things are very important. So first, we're going to take a look at which entity is best for you. And you may be wondering already, and perhaps you've done some research in this online, why do you get so many different answers? And what we've done over the years, because we've spent several $100,000 between very high-end tax firms, law firms, different smaller bookkeeping, accounting firms. We've had clients who've consulted with very high-end different firms, and we've gotten a lot of data of information. And here's the patterns that we discovered, that depending upon who you go to will result in the type of advice you'll receive. So if you go to a lawyer, you would of course expect legal advice, unless they were a tax attorney. We do work with tax attorneys. If you go to a tax professional, you'll receive tax advice. Now, if you go to maybe an enrolled agent or a smaller tax practice, don't be surprised if they recommend a sole proprietorship to keep things simple, because if most of their clients are W-2 wage earners and independent contractors, mostly they're going to file personal returns. They may not recommend a corporate or S-corp or a partnership type tax return, because they might be more complicated. That's not something they're comfortable with. So don't be surprised if that happens. If you go to a financial planner, they'll give you financial planning advice. So they might be looking at what type of retirement plan goes with which type of entity, and that may be the tail that wags the dog for them as far as kind of focused on your retirement. So that shouldn't be a surprise either. If you go to a banker, of course, they're going to give you banking advice, and they'll answer some simple questions about what do you need to open a business checking account. So if you have an LLC, you might hear things about, we need the articles, the operating agreement, and the tax ID number. Now, that doesn't mean it's a complete formation. That means that's what the banker needs to open the bank account. So those are important. Now, if you go on the internet, of course, you'll find all types of different answers. If you go to a marketing professional, they're going to really focus on the marketing advice, the funnel, cost per lead, cost per sale. What is your marketing funnel look like? Different strategies to bring in more customers, lifetime value of a new customer. All of that's valuable, very important strategies, but that's the next step in the foundation of your business as far as generating profitability, right? If you speak to a business license person, they're going to give you input about the business license, right? It's not the full picture. If you go to a service provider, again, you could get different answers across the board. So the challenge is there's really no agreement for business entity or state, meaning if you went to all these different people and you described your situation, you're not going to get the exact same answer from each person because there's different weighted factors. So what we've done over the years is look at these weighted factors based upon spending our own money, interviewing these different people. For example, tax attorneys might be $500 an hour. A SALT expert might be $500 an hour. So all these things come into play. And so the information I'm going to share with you is a blended approach based upon certain factors. Now, when we look at business structure, these are the factors that we want to consider to determine which business structure is best for you. Overall taxes, because usually the goal is to pay the lowest in taxes, and we have to also look at, Are you currently employed? Do you have W-2 income currently, or do you not? Is this business going to be 100% of your income? Do you have other income? So taxes from the gross sales net profit is going to be important. Now, in reality, what happens, a lot of people overestimate, as you can imagine, their gross income. They underestimate their expenses. Therefore, they overestimate their net profits when they get started. The reality is a lot of people might experience breaking even, maybe losing money the first year. Your situation could be very different depending upon what type of business niche you're in, right? So liability is a very important factor to separate business and personal assets. If you currently have quite a few personal assets, maybe you have a lot of equity in your home, maybe you have a couple rental properties in your own name, which isn't a good idea. We'll talk about that in a couple minutes. Maybe you have some investments outside a retirement plan in a brokerage account. Those are all assets that could be potentially up for grabs. Now, there's different rules in different states. You might say, Scott, well, the state I live in Florida, has an unlimited personal homestead exemption, so the $1 million of equity in my house in Florida is already protected. And you are exactly right. So there are different exceptions to these things to keep in mind, but these are some factors we want to keep into play. Now, some people don't have any assets. They're launching a new business. They still want to separate their business and personal liability because they feel very confident that they want to move forward. Some people will find that from the standpoint of starting their business off as an LLC or corporation, from a marketing and branding point of view, sends a very different message to the marketplace, and that alone pays for itself. Even though if you went to an accountant and you said, I'm going to do $70,000 in revenue and I may break even, the accountant's going to conclude, well, from a tax point of view, if you're going to break it even, let's keep it simple, be a sole proprietorship. You might have a small loss on a Schedule C that'll offset your personal W-2 income. But from a branding point of view, if you're a sole proprietorship, the message to the public is you're either new, you don't make that much money, or you don't believe in yourself. Now, you've obviously, if you're at that point, you've paid our fees to form a entity for you. So either maybe you did already understand it, or now it makes more sense. That's one of the reasons we're going through this process. You also may want to look at what's called audit risk. Some of you may want to be off Schedule C. Schedule C is what happens when you're a sole proprietorship, or if you're a single member LLC disregarded, owned by you as an individual. There's lower audit rates in general, sometimes still being a single member LLC disregarded because you're going to break even and you want to lower the overall costs for accounting still makes sense. So it's something to keep in mind. And again, as I mentioned a minute ago, the marketing and branding message, again, when you're dealing with a legal company, that already sends a strong message that nobody really quite knows, well, you're the president of your company, you're the manager of your LLC. How big is your company? I don't know, but it already sounds impressive versus being, the sole owner of your sole proprietorship. So it makes a difference. And of course, one of the other key factors is, do you have any partners in your business? If you are an individual, that leaves, a couple less choices. If you have a partner, whether it's an outside partner or a spouse, then you can decide. Obviously, an outside partner, you can still decide with an outside partner, should you each have your own entity? Should you invoice each other? Or should you really be owners in the same entity, look at a buy-sell agreement, things of that nature? If you have a spouse, there's a lot of factors that come into play, mostly an emotional one. I've been married for 22 years, so my wife and I keep everything separate as far as business structures. She has a totally different business than I do, so that makes it easy. But some of you may be running a business together and working together. So in that situation, you may decide that maybe both a husband and wife or partners will be on the same legal entity moving forward. And there's different questions to ask if you're in that situation, because again, there's no cookie cutter approach. Sometimes when you have two spouses, one runs the business, one wants nothing to do with it. Well, that's simple. Sometimes one runs the business and one feels uncomfortable if their name is not on the business. So that's a different subject. So that is another reason. Sometimes both people are running the business together and they're going to both be on it. So these are some of these factors that come into play.